Monetary Policy Committee of the Bank of Namibia decided to lower the policy rate by 25 basis points to 7%. This decision underscores our commitment to fostering growth and prosperity. At the heart of this commitment lies the core principle of monetary policy, that is, ensuring low and stable inflation. By anchoring stability, we create a solid foundation for sustainable economic progress, safeguarding the well-being of businesses and households alike. This decision was reached following a comprehensive review of current and expected domestic, regional, and global economic developments. Let us consider domestic developments that has influenced this decision. Domestic economic activity continued to expand during the first 10 months of 2024. The domestic disinflationary process progressed steadily since the previous MPC meeting, while growth in private sector credit extension, PSC, improved despite remaining subdued. The merchandise trade deficit widened further, while the stock of international reserves remained sufficient to maintain the currency peg and meet the country's international financial obligations. Domestic activity strengthened during the first 10 months of 2024 relative to the same period in 2023. The expansion was primarily driven by mining, electricity generation, wholesale and retail trade, tourism, communication and transport sectors, and the livestock marketing subsector. However, the diamond and crop production subsectors contracted during the period under review, while the construction sector remained subdued. Expected real gross domestic product growth has been revised upward since the last MPC meeting. From 4.2% in 2023, the real GDP growth for 2024 as a whole is projected to moderate to 3.5%. That is 0.4 percentage point higher relative to the projection at the previous MPC meeting. The upward revision emanated from a stronger than anticipated performance in the primary industry, especially gold mining. Likewise, the growth projection for 2025 has been marginally revised upward by 0.1 percentage point to 4%. Risks to the domestic economic outlook stemming from external factors have gained more prominence, while those from domestic factors remain broadly stable relative to the previous MPC meeting. External risks include the escalation of geopolitical tensions, geoeconomic fragmentation, and weaker global demand. Other risks are sovereign debt distress, renewed fluctuations in commodity prices, and the contraction in the Chinese property market. Internally, drought conditions and water supply interruptions continue to pose downside risk to growth outlook. That is particularly as far as water is concerned in the coastal towns. Domestic inflation decelerated further since the last MPC meeting. Inflation averaged 4.5% in the first 10 months of 2024, a notable deceleration compared to 6% in 2023. Similarly, inflation slowed from 3.4% in September this year to 3% in October 2024. The inflation rate registered in October 2024 is the lowest since February 2021. The disinflationary trend is attributed to the sustained lower average food inflation and most recently, the deceleration in transport inflation. Looking ahead, the medium-term inflation projection remains unchanged from the previous MPC meeting. We now forecast 4.3% for 2024 and 4% for 2025. The annual growth in PSC remains subdued. In this regard, PSC growth averaged 2.2% during the first 10 months of 2024, lower than the 2.5% recorded during the same period in 2023. The sluggish growth has been attributed to weak demand, reinforced by the high interest rate environment. Since the last MPC meeting, however, annual growth in PSC improved to 3.4% at the end of October 2024, from 2.1% at the end of August 2024, driven by both businesses and households. Namibia's merchandise trade deficit widened further, reaching 31.6 billion Namibian dollars during the first 10 months of 2024, relative to the 28.2 billion Namibia dollars during the corresponding period of 2023. The wider trade deficit is largely due to increased import payments, especially in the categories of consumer goods, machinery, and base metals. The impact of higher imports on the credit deficit was, however, partially offset by a rise in export receipts, notably from gold and uranium. The stock of international reserves rose to 60.9 billion Namibian dollars as of October 31st, 2024, compared to 57.1 billion Namibia dollars at the end of September 2024, primarily attributed to SACU inflows. This level of reserves translates to an estimated import cover of 4.1 months, which remains adequate to sustain the currency peg between the Namibia dollar and the South African rand, and meet the country's international financial obligations. Excluding hydrocarbon exploration and appraisal-related activities, the import cover stood higher at 4.9 months. Let's consider the global economic developments. Global economic recovery has slowed somewhat since the previous MPC meeting. Inflation rose in most monitored economies, while the monetary policy easing cycle continued to gain momentum. The global economic recovery is estimated to have slowed since the previous MPC meeting. Among the monitored economies, available third quarter data indicates that growth has moderated in the United States, United Kingdom, Japan, China, and Russia. Looking ahead, the International Monetary Fund in its October 2024 World Economic Outlook projected a stable growth rate of 3.2% in both 2024 and 2025, broadly unchanged from the update they have provided in July 2024. International prices of key commodities were mixed relative to the previous MPC meeting. Buoyed by safe haven demand, the gold price surged to a peak of nearly $2,800 per ounce in late October 2024, but thereafter retreated to around $2,640 per ounce at present, roughly the level observed at the time of the previous MPC meeting. Zinc prices increased, partly reflective of the rise in demand from China, while copper prices softened somewhat but remained elevated. Furthermore, maize prices were higher, partly driven by unfavorable weather conditions. Since the previous MPC meeting, diamond prices have been fairly stable but remain significantly lower than in the corresponding period a year ago, reflecting weaker global demand and competition from lab-grown diamonds. Uranium spot prices declined somewhat since the previous meeting, but remained elevated relative to the same period in 2023, sustained by strong demand for cleaner, safer, and more secure energy. The Brent crude oil price trended downward since the October 2024 MPC meeting, mainly due to weaker global demand. Global equity markets gained since the last MPC meeting, led by the S&P 500, which has continued to set multiple record highs. The upward momentum was partly driven by optimism regarding the November 2024 US election results and monetary policy easing. Bond yields rose somewhat owing to the ongoing gradual reversal of quantitative easing and the anticipated expansionary fiscal policy in the United States. While the broad trend continues to be downward, global inflation rose marginally in most of the monitored economies since the previous MPC meeting. In the advanced economies, inflation moderately increased in the United States, the Euro area, and the United Kingdom, but slowed in Japan. Similarly, across the key emerging market and developing economies, inflation was higher in Brazil and India, whilst decreasing in South Africa, China, and Russia. On a positive note, global inflation is projected to decrease in 2024 relative to 2023 and decelerate further in 2025, with a faster pace of disinflation expected in advanced economies than in emerging markets and developing economies. Monetary policy easing has progressed across most of the monitored economies since the last MPC meeting. The US Federal Reserve, the European Central Bank, the Bank of England, the South African Reserve Bank, and the People's Bank of China all reduced rates at their most recent MPC meetings. Meanwhile, the Bank of Brazil and the Bank of Russia have tightened policy rates, while the Bank of Japan and the Bank of India have held rates steady. So what's our policy stance then? In deciding on an appropriate course of action, the MPC noted the most recent slowdown in inflation and welcomed the medium-term inflation outlook that remained well contained. Risk to the forecast, however, remained. The MPC was further gratified by the moderate pickup in private sector credit extension growth, which in the latest print marginally outpaced the concurrent inflation rate. Noting the relatively high level of domestic real interest rates, the ongoing need to support the domestic economy, the adequate level of foreign reserves, orderly capital flows, and recent monetary policy easing trends in key central banks, the MPC unanimously decided to reduce the repo rate by 25 basis points to 7%, with immediate effect. Commercial banks are accordingly expected to reduce the lending rates by 25 basis points, bringing the prime rate to 10.75%. The adopted policy stance will continue safeguarding the one-to-one link between the Namibia dollar and the South African rand, while supporting domestic economic activity. In deciding on this policy stance, the MPC also considered the policy rate differential of the South African Reserve Bank, with a keen desire to close the gap over the medium term. Furthermore, the committee welcomed the current fiscal policy stance, which is supportive of macroeconomic stability, underlining the importance of government's growth-friendly fiscal path and investment in growth-enhancing initiatives. Finally, the MPC deliberated on the potential implications of the South African Reserve Bank's proposed downward revision of its inflation target for both South Africa and Namibia's monetary policy and inflation trajectories.